snag it, and I'm going to do it within the cloud infrastructure as well. All right, so it's time. So let's go ahead and let's get started. All right, so you probably heard me make a comment to Randy. I'm on version 20. I thought version 19 was pushed already. I'm sure it'll be pushed this weekend if it isn't out there already. When I get started, I'll review with you how I do my updates in case people haven't done them. A couple of key things. You should be hooked up through the Windows Store by now. Everybody who's a paid user or even a trial user um, should be receiving their updates and their product through the Microsoft Windows Store. I'm sure there's a really good reason why we did it. I think it helps us with distribution and updates and also control. I love it because the Windows Store will let me have 10 different devices, but I can't use, but we don't, you should be using it on one device at a time, but it means that I don't have to be reauthorizing machines if you change computers, and nobody changes computers more than I do. So as long as you're Windows Store authorized, then you'll be able to load it on that specific machine. And once you load it once, it's a piece of cake to load it on the next couple. So today will be mostly in the program, which is what I wanted it to be. But since I'm going to stick it out probably for others to see, at least on Top Down Trader, there'll be a few minutes of background. So thanks everybody for joining and taking time on your almost end of holiday weekend. So again, the topic for today really is workflow and Jumpstart. If you see things that you don't have in your version, don't fret about it. It just means it's in my version, and once I've cleared it, it'll be in your version. From a housekeeping perspective, I'm at home, so I don't expect any internet things. But if I go out, if you can't hear me, if there's a problem, please either put something in the chat box, or somebody who has my cell number, like Scott or Nagesh or somebody, let me know that I've been dropped, because we know what happens. All right, and my email address, if you don't know, it's marketmripro@gmail.com, probably the easiest one. So this is for educational purposes only. Anything we talk about is taken in the spirit of education and not investment advice. I do these videos, all my videos, whether my YouTube videos, my mentoring, whatever, to teach people how to use my tools. Trading involves risk. You're solely responsible for any investment decisions you make. I may own or intend to buy or sell anything I talk about. Trading stocks and options should be considered risky. You should always consult your financial advisor before making trades. And I'll mention the other platforms, but this is really all in on the Market MRI Pro app. You're all probably members of Top Down Trader. This is my only mailing list, and the best thing about this mailing list is you have to sign yourself up and you can take yourself off. You don't need my permission for anything. And why would you want to hook in? Because it's where I share things. I let you know I post things on YouTube, among other things. So I think it's a worthwhile thing to have, but I'm biased. Just a few words about the things that I'm using. Many of you know who Ian was. Some of you were actually lucky enough to sit in the room and listen to that brilliant, wonderful person teach. A lot of what I do comes from Ian. Um, you know, almost 80 to 90% of what I do, I learned through Ian. Ian started with CanSlim, and I think he made CanSlim better personally, but he broadened it with Alexander Elder and Bollinger and Morales and Katcher. And so much of what I talk about comes from that. And I've spent a long time going and paying for seminars with various gurus so I can learn what they do. And what I do is hodgepodge. And if there's anything, well, what I love about Market MRI Pro, the app, is Praveen did a brain biopsy and built something based upon what I wanted to do. And so again, a lot of influences on me. And, here's Ian. And again, all of us who are blessed to know him are better off because of it. John Person, he put out an email this week about his beta. He had a laundry list of things he wanted Praveen to fix or adjust. And I think Praveen has caught up. So hopefully we'll hear more. It'll be coming out of beta and up on the market very soon. But that is purely up to John. Sagar, a big influence, and I use his tools independent because he'll only put his tools in Metastock and in Tradestation. I don't think he's at a point in life, although he's considerably younger than me. He better be because he's got a young kid at least. I don't think he's at a point where he's going to put him in any other platforms. And then George Lee, I mean, so many of us had the pleasure of spending time in the room with him. So I've had a lot of influences. I'm going to talk about how I address the market, and it's a top-down approach. I'm not a day trader, and I'm not going to trade options that are designed to give me premium with the stocks not going anywhere. I'm purely a position trader, positional, not, and the length of time will vary. Daily and weekly charts, although we did put minutes into this program and every other time frame for the few people that wanted them. Indicators and scans, they're not magic, okay? A plus is not magic. A is not magic. But what they are tools to help me get a list of stocks that meet some of the criteria that I like, so I can take that list and I can look at the stocks and see if anything meets my interest to take a trade. And we're going to look at a bunch. I focus on the long side because, frankly, the market's mostly long all the time. You go through periods, and Ian used to track month to month, year to year, and he would paint out when growth stocks were in favor versus when they weren't. And they're in favor for a long time in a row, and then they're not. But it doesn't mean the market's not still long. I mean, yesterday, if you didn't look, I guess it was yesterday, the mags blew up. Yet, one of the titles that I used in my video was it was a lot better than it looked. And big rotation day, and maybe it's okay if the mags don't do anything and the rest of the marketplace catch up. Hey, Joel. I use rules-based position sizing and stop management. I'll talk more about that at the January 31st session. We're going to do probably 3 hours, including a deeper dive into the indicators, what makes them work, what they are in the program. But again, put you on your calendar. I'll send out invites soon. And it happens to be my birthday. And you might ask, why the heck would somebody do that on his birthday? Because Happy New Year. Yep. Because it's the one day my wife can't get mad at me for doing something. And Scott knows exactly what I'm talking about because he knows my wife and he knew her before I did. And yet he didn't warn me off, but that's okay, Scott. I forgive you. Now I love my wife. And I'll show you how I use the tools to get it done in a short time each night. And how I trade really hasn't changed in 30 years. Most of you have seen this slide. Hey, Jeff. And, this was the first year I showed performance. And why did I do it? Because every time I do a webinar for somebody else, somebody in the audience asks me, what performance do I have? And now I can refer to go look at those videos and you can get your own idea. No one on a live video when I'm doing for a third party, there's no way in the world I'm going to show a broker statement. One, I don't know who's in the audience. And two, I wouldn't do that to somebody because if I'm claiming a certain level of performance, I better be able to back it up. And if not, I'm in trouble with the SEC and other entities. And why would I want to put that on somebody else? I always show you some of my favorite trades in the live meetings, but I'm going to show you where I ended up the year. Did I take heat the last week? I certainly did. So as we talked before, I moved most of my money in 2025 to professionals. I kept 150 to manage myself. Once I doubled it, I allowed myself to add 500 more. That was in July. Why did I do that? My business is getting close to an exit. And whenever we do, my business partner starts every day beating me up, saying that my most important stock is the one in our company and to stop spending time in the markets. And he's right. So that's why I did that. I had health scare in 24. And so I want to spend more time with family. My granddaughter lives 5 minutes from here. My grandson's a little further. So I simplified my life. And I wish I would have kept all the money in my own because I ended up the year, this is the Schwab, as of end of day 12/31, 185.22% was my return on my own managed money for 25. I have a lot of benefits over anybody on this call that's a money manager. I would never want to trade other people's money because then I have to have a conscience. I have no conscience. If I make money or I lose money, I sleep just the same. I also can get in and out because my position sizes are small. I don't have to be out trying to get new customers and having my time, split between selling and managing a portfolio. It's much easier. And then what really blew me away was they had this investment championship that a professor at a university out west, it's like $750 a year to enter. They have different categories. And someone on a webinar on IBD yesterday said that 85% of the people that manage money in that program, of the participants, were below the market averages for the year. Well, you can see down here that it was a great year. I mean, when you get 22% return on the NASDAQ in a single year, 18 on the S&P 500, way above average. And when 85% of the people that think enough of themselves in managing money paid 750 so that they can be in a contest, um, came in less than that. It tells you about how hard it is. And even though it was an easier market, it still had its moments. If you're wondering what this line here is, that's simple. That's when I put the $500,000 in. And this would be the entire year equity curve. You can see I started off with a bang. I lost it all in March and April, not all the money, but the profits. And then, I called a turnaround, which we'll talk about in a few minutes, and the market peaked around October 15th and then pretty much did nothing into the end of the year from my portfolio. Now, I often put up that slide that says you can get 100% return in a month in a super strong market trading growth stocks. Well, this was between April 7th and October 15th. I arbitrarily called that the top. I should have been easier on myself and just called it the 8th. But I was up 466.79%. Real money, real trades, real risk. But again, the luxury of trading my own money, not having to worry about blowing up somebody else's life savings. It's a very different thing. And you could see during that run in the market, it's a great equity curve with very little pullbacks. And that's kind of what you want. Now, I won't say that. It'll be a long time before I can talk about a 400% return over 6 months. All right. Hope not, but odds are it will be. But I hope to see whatever the number is here, to see equity curves that look like that. That's got to be my goal. And of course, I overstayed my welcome and I gave back some of it, but that's okay. It's trading, and it's a give and take. So I have no doubt that what I do can drive good returns. I didn't have doubt before this year. That's why I do this. So I use options for leverage. One of the folks on the call, I spent about an hour and a half yesterday. I want low cost alternatives to stocks. I want limited downside risk. When possible, I'll take unlimited upside. Not always possible if I want to keep the cost down. I'm not afraid of margin, and sometimes I have no choice because if I take a spread, if I do a synthetic call, I buy a call at the strike price, the current price. I sell a put at the same strike price, and I buy a put underneath to protect my downside. There is a downside risk there, and there's going to be a margin held against that. So even if I don't use margin by spending more money than I have in my account, I might trigger margin just because of those spreads. Avoid big losses. That's how I design my spreads. Where I get into trouble, and I know my weakness. All right. My weakness is I'm not good at taking less than what the option is worth. And what does that mean? I might have a call that I bought at the money. So at the money, I paid a fair amount of time value. And then the stock moves a ton. And that call is worth a lot of money. But if I try and sell it before expiration, I'm never going to get the entire intrinsic value of that call. That's just the way the market works. And so sometimes I'll hang on too long with a lot of profit sitting in an option and the market pulls back. I got to get better at that. And that's something I've tried to do. What I'll do when I think the market's getting soft is I'll raise cash. And I'm still in a lot of cash right now. Follow my trading plan, pullbacks and uptrends, two Momo dots, and John Person's weekly HCDs. Those are my three go-tos. Um, I try and buy the same number, whether I'm buying stocks or options. I don't want to have massive position sizes because I can in options, especially if there's a downside risk. Now, if I'm still intrigued by a company that I think is really mispriced and it's too cheap, and I know that they have a great drug in pipeline, I might go crazy on position size. But we're talking about something that's really cheap and a belief that they're going to have a drug approval or something like that. And I will tell you guys about those. Go look at AXSM and then ask Kathy one day when she shows up on one of these webinars live and isn't playing golf. I have to schedule them on rainy days about that position because sometimes they actually work. I roll my winners up and out, so I want to buy higher strike prices to put money in the bank, and I usually do it close to expiration so I don't get hosed by the options maker, market maker, and I want to push out to further time frames. Um, I try not to do FOMO buys. Sometimes I can't help myself, and they usually haunt me. So, and then by having an account that to me was less significant of my net worth, I slept a lot better, and I didn't find myself waking up to look at futures. I remember when I was sitting on about $4 million worth of Amazon. I'm building a house in Santa Fe, and the Amazon was going to pay for the house. And I was getting up in the middle of the night to make sure I still could afford the house. That was just not worth it. Um, about ready to jump in the program, just to remind folks, um, there are multiple platforms out there that you can do almost all of this. HGSI is not my platform. It was Ian's platform. And if so much of what I do is based upon Ian, then you better believe that you can do a lot of this in HGSI at a lot less money. All right, HGSI is probably $7.95 or $8.95 a year. I will also tell you the downside of HGSI. And by the way, I use HGSI every day still. It's the learning curve, and not most people aren't going to, well, they aren't going to have the time and nor make the time investment to learn how to use it. I mentioned Sagar and John's. HDSI has for a separate purchase John's Toolkit. It's an annual purchase. In Tradestation, I use Tradestation regularly. And one of the reasons why I like Tradestation is because it has, let me get to a chart and I'll show you. I can combine in a single chart my stuff. I can have, I could put PPS from John in here because I own his package in Tradestation. I didn't write those trend lines. Those are Sagar's automatic generated trend lines. In my scans, one of the things that we did in Tradestation that really has been good with me is this thing here that looks like a radar screen, but it's a scanner where you basically run it once and then you basically can scan off of this instantaneously like we do in the Market MRI Pro app. And I've combined Sagar stuff in mine. So there's things about TradeStation that I like. It has its issues. It's not stable. You have to have the brokerage account with them, which you can't do in certain parts of the world. And they've got a new version called Titan that they've launched, which doesn't seem to take any of the indicators that I own. TradingView, I actually include TradingView with um, purchase, not TradingView itself, but my indicators. I forgot to load this one, so let me just stick it in there. Metastock, we recently launched. Why did I like Metastock? Because it's got Sagar stuff in it. And I really think Sagar can make music with some of the Excel spreadsheets he uses. And then I tried to work with Praveen, and we're not done. Rob Hoffman always says with Wealthcharts, which by the way, I'm also in. I should have included that in the slide. But Rob also says he's just getting started, so I don't want to copy him. But Praveen's just getting started. Every day, Praveen and I, and then Praveen and John, and then sometimes all three of us are on the phone talking about the next feature we want to add. Some of them are pretty darn cool, so we're not done. If you're interested in learning more about Sagar, go to superiorprofit.co. On John, it's personsplanet.net. Um, on Black Friday, this is about to go into the program. On Black Friday, we had a sale. I've let everybody know that I'm raising the price. Oh my God, Kathy's on. It must be raining, but it's sunny. All right, Kathy, I made a comment about you before you joined, said they should ask you about AXSM and buying a biotech and holding it for a while to it happens. But I've been very loud in the market that the price is going up. So we're raising the price to 26.95 starting on Monday. However, the Black Friday price of 14.95, which also includes all my TradingView indicators, is still going to be honored until 11 p.m. on Monday. So yes, the price is going up, but everybody has had fair warning. Today's the Jumpstart. We're going to go into that. As I mentioned, I will send out links in the next week or so, and hopefully have the right time zone this time. Sorry about that. Thanks to everybody that let me know. But I'm going to have the long session on January 31st, and join my Google groups. And I hope you participate in my nightly market commentaries. They're good. And I mean, they're scary good now when I go back. And I'm not doing that to be obnoxious, but they force me to be much better at what I do. All right. I love the markets and I love sitting at my computer and playing with the different programs and trying to decide what to do. But I also have the concentration sometimes of a squirrel, and I go chasing shiny objects here and there. And what these videos have forced me to do is to have a regimen and to follow that regimen. The other thing is access to my layouts. If you see layouts that you don't have, that you want, the cool thing is I can share them with a number now. How I don't even know how Praveen did that, but that is by far the best way of sharing things I've ever seen. I'm always hacking my computers. Well, not really hacking them. I go through a lot of computers, and part of it is because I have a disease where I can't, something new comes out, I always get it. But I've got 6 or 7, five of them notebooks for sale right now. All my laptops are maxed out. They're the highest configuration of each one available. I've got some special gifts I put on them that have high value if you want to keep them, training things. And so if anybody's interested, let me know. I can tell you that, and I'm not even in that industry, the prices because of memory and SSDs and video cards on the 26s are probably going to be up significantly because of the data center demand. I watched this forum in Reddit where people are just bitching about the cost of the NVIDIA cards, and they're going into all these data centers. So if you have any interest in this, just email me. I can tell you about what's in each one. Or if you go look them up on Best Buy or whatever, it'll be the highest version that they have. All right, let's go into the program. I am now going to share with you in the chat box a PDF of today's presentation. And the reason why I'm going to share it with you is I'm not going through it anymore. It's all the stuff I usually talk about, And now I want to go into the program. I do want to point out that this slide, if you haven't had it before, will answer a lot of your questions. It will tell you what each of my indicators is from a naming perspective, um, the best supporting actors, which we'll talk about, and if you don't have the ones that do a better definition of what goes into each of these, come on January 31st. So that way you have the slide deck, and now I don't have to talk about it anymore. Not that I don't mind the slide deck, but that's not why you're here. All right, so what I want this to do today is to do workflow. And I'm going to talk about how I do the market, how I look at each thing here, and on those views or layouts that have lots of buttons and things, I'm going to try and show you what they all do. There on the JS layout, there's new ones that I haven't figured out yet. And hopefully by that time, Praveen will get out of bed. I'm just kidding, but sometimes I'll wake up at 6:30 and he'll just emailed me or texted me something to get in the program, which means he's up to 3:30 and 4 o'clock. So, all right, I always look up here in the upper left-hand corner. A couple of things about formatting. I hate my formatting. I hate the fact that when I change something, the formats will change across the board. That is a glitch in our platform. We've asked for it to be fixed. And hopefully, and what I mean by we've asked, we bought modules that were already existing and we built our platform into some of those modules. Um, there is a program called PTS Charts. They use a complete program that they buy, which is basically an ice cream cone, and then they add their ice cream to it. But that ice cream cone was pre-built. Praveen built the ice cream cone by stitching together his own work as well as buying modules that were available in the market to do exactly what we do. And then we built all of our intelligence, all the things that we do into the program. So there is a base skeleton. Part of the reason why there's an annual fee that I have to pay for on an annual basis, which is on that infrastructure. Well, you'd hope since I still pay for it, they'd fix it, but they don't see there's anything wrong. So I go into the first 1 day close and I like to rank them by what did the best. I then find any of these windows, I right click in that window and I hit best fit all columns. Now, one of you told me about this on a webinar that I was doing, so I appreciate that. I wish it stayed that way. So I'm always going to look at, when I do the end of day review, Bitcoin and the dollar separately and volatility. And then I look at the performance of the market. Turns out how I perform looks a lot more like the Russell sometimes than it does anything else. That's probably because I've got a lot of small cap growth stocks in my portfolio. And I look at these are percentage changes. Okay. This is also really important to me because one thing I talked about when I did last night's video is that I like it when the Russell and Diamonds finished at the top of their daily range, much more bullish than the spiders and Qs, which were down on the Qs and up on the spiders, who closer to the bottom or the middle of the range. Um, last week was a four-day week. I don't know if I'm looking back 5 days or 1 week here. I wish this was just 1 week because it always bugs me because if it's 5 days, it's capturing the prior Friday. Yes, no big deal. It just bugs me. Um, I like looking at the high and low. You can see Bitcoin was on fire, up over 4% at one time on Friday, still finished fine, but in the middle of the range. And you learn a lot, I think, from the highs and the lows. Um, it was a weird day in many reasons, which we'll talk about as we go. But I watched my portfolio pop at the open. I'm all excited. I did two FOMO buys. One did well. One ended up doing okay. Actually, I did three, and one killed me. But all of them, after I bought them, went down, and then they recovered before the close. But which is why FOMO buys are bad. I still love one of them, which is CCJ, which I've been wanting to get back into when it told me it was the right time. I look over here I'm not sure that I like what we're doing here. I like what we're doing. Don't take it wrong. And if somebody has feedback that disagrees with me, I kind of care more about the 12-month new high, new lows than the intermediate ones. And I'm wondering if I wouldn't rather have maybe 5 days in a row where the last 4 days so I could see how it changes over time. So I'm going to talk to Praveen about whether that can be done. And how cool is it when your programmer is your partner? And you know what? You're all our partners. And when you want something done or something different, you can actually talk to the guy that's out there coding it. And I mean, to me, it's a great thing. So we can see they both turned positive. Now, um, that's an improvement, but they're both kind of puny. But I think it's important that we would know mathematically the last 4 or 5 days. So I'm going to ask him to populate as many rows and just give us a look back 1, 2, 3, 4, 5, etc. days back. I think that that might be a better way of looking at it. Sager took the buckets from me and made them better. And then I trumped him by adding the NASDAQ and the NYSE. And Sager and I are friends. So trumping and taking, when you're friends, it's a positive thing because I own his stuff. I think his stuff is great. So Sager showed us sector performance today versus yesterday, industry today versus yesterday. So Saturday versus Wednesday this week, a weird week. I like the number of stocks advancing and then the number above the midline and the Bollinger Bands. You won't hear me talking much about this one because it kind of fits the buckets. But I like to see a strong day. You want to see broad-based representation. So 73% of sectors up, 73% up, and 64 up. So it was a strong day. Wednesday was horrible from a breadth perspective. Percent advancing 65, 57, 65. If all you did was look at the Q and big cap tech, and you looked at software, IGV related companies, you would have thought it was a horrible day in the US markets. When I see that we're above 60%, 65 and 65, then the NASDAQ at 57, it wasn't a bad day in the market, I always struggle with the titles of my nightly videos, not like anybody looks at them, the titles, but I called it, I wanted to say it was better than it looked, and then I played around a little bit with it on the title, but I thought it was better than it looked. And this was part of the reason because you see the breadth. And then over here, and you got to remember that you have different ways of chopping the sectors up. But here are the S&P 500 sectors, and I like to see the leaders was energy. And if you follow this every day like I do, is you'll see that the energy goes up and down, up and down, up and down. Industrials, materials, boy, that's where it was at yesterday. Industrials and materials, really super, super strong. And where was it weak yesterday? Discretionary and services. So Amazon and communication services and even Staples was relatively flat on a strong day. That was interesting, amusing maybe. But what really blew my mind was the number of things here on the themes that are above 4%. Uranium was up 7.79. One of the shiny objects I bought at the open was CCJ. Might as well own the best. Clean tech, 5.46. Solar, 5.05. Did you see what First Solar did? CSIQ, RUN. China, look at Baidu and Alibaba. Blockchain, Bitcoin was up. And then data centers, data centers. I would say, as I looked at my stocks charts last night and this morning, I still got a few more to go. There is a strong data center theme. And what does that mean? Data center means you're going to have uranium. Solar is being talked as a potential power source. You're going to see blockchain because companies like HUT and Riot Blockchain and Oklo, I think was the other one, were Bitcoin data miners that are now becoming energy suppliers. Why? Because you needed the same massive amounts of energy for Bitcoin miners. And take a look at Caterpillar, um, metals and mining, semiconductors, super strong day. And if I click it, you can see the laggards. Tech software down 2.9%. Look at the last 2 months. Tech software using 25 days as a month, down 10.77%. Over the last 5 days, down 5%. Cloud down 234, cyber 233, internet 135, another cyber ETF 1.08. Now, similar to above, because I'd already done this, I came in here, I find the 1 day change, and then I find a clean area and best fit. And as long as I'm only playing in one column, see, once I change columns, the formatting changes. But if I'm only looking at one column, I can flip it around as well. That's what I do on this sheet. That's a lot. Tells you a ton of information. And just remember, during the day, I have a real-time data feed. You saw how fast that updated. Well, I saw how fast it updated because I saw the changes occur here. But it will update very, very quickly during the day as well. It's very, how do I keep data costs down? How do I avoid you having to go out and pay $500 a year or $1,000 a year like you'd pay in Genesis or most other programs? Is I don't stream. I buy an enterprise package of real-time data, which allows me to share it with an unlimited number of users. It may be 200. I don't know if it's really unlimited. And I don't ask you if you're pro or non-pro, but I also don't stream. If I went to streaming the data, we'd have a different story, and I don't want to do that. The other good thing is it is real time, and therefore you could keep clicking that and keep getting updates. Not that it would make sense to me. So I start there. Then I go to the timing brief. And, it's funny how this thing came about. The bongo, most of you are HGSIers, was something that 5 or 6 of us developed. Bob's on the phone, on the call. We developed it a long time ago. And Dave Steckler, one of the group of us that did it, um, actually traded other people's money. And he used to use the bongo as part of his timing model for his ETFs. The bongo is a trending indicator. So a daily bongo works pretty quickly. A weekly bongo works a lot slower. And then the other thing that we use here is a weighted moving average, a 30-period weighted moving average. And so I played with a lot of different timing models. I bought a lot of different timing models. And I found just a simple model work, which was if the first time the price closes above that WMA, assuming we were in a downtrend, and the bongo above is blue, I enter the buy zone. And I stay in a buy zone until the first day we close above the WMA, below the WMA, and the bongo above is red. So the bongo doesn't put me into a sell signal. And sometimes the bongo will turn red on just a little pullback. But I wanted to avoid whiplash. Well, there's still a lot of whiplash in any daily model. And if I really wanted to be obnoxious and I wanted to do an intraday version, which I played with, all right, it undid itself, so I won't show you now. I can actually build one on the hourly charts, and it actually may have value. I'll just leave it at that. So I'm spending time looking at that because it's not changing every bar. And it does get you, it maybe gives you a sense of during the day when is the right time to be going in. A daily timing model, excuse me, and an hourly timing model are not anything that give you the dominant trend. It's giving you the short-term direction of the market. That's important because I may not want to be going long, even if the long and intermediate term direction's long, when the short term is pulling back. But I sure as heck would like to find it when it's reversing higher, especially when I look at stocks. So I start with typically the weekly. I think that's the default that opens up. Ignore the lines. They're written on a different time frame. One thing, Praveen, you're here, so let me throw this one out at you. It would be a really valuable feature, in my opinion, if I had a check mark on each layout that said, bring in all my saved lines or not, so that I could mark up a chart differently here than it is in another layout. I just don't know if that's even possible. And maybe I'm the only one that would want that. So I start here. And you'll notice that if the goal here is to keep you in the markets for a long time, my simple little timing model has you in the market since May 5th, since May 12th, and it's kept you in a great market. That's the goal to me of a timing model. And oh, by the way, it got you out here, this bar. And I remember I was so pissed here because we just closed the nubbin below the WMA. But the signal was right. Um, you avoided the pullback. Now, the problem with the weekly model is it gets you in too late, and it typically gets you out a little late as well. So maybe I want to work quicker. That's where the daily comes in. I can even look at the monthly, and we've been long on a monthly spider since um, October of 23. Now, it seems like who cares? I get that. So I have this program, I've had it forever. It's not one of my primary programs called AbleSys, but you pay a lot of money for it, and it's a one-time purchase. And I run it in an e-signal, and I actually have it on one of my computers because I got a way of ranking things from relative performance during the day that I use it for. And just for grins, I have the AbleSys model on the ETF's monthly charts. And what I learned from that model is that this happens and it's not the end of the world. That it didn't even trigger a sell signal in the spiders, the Qs, or the diamonds. It did for a short couple of months in the Russell. And that if you don't believe that the dominant trend of the market for a long time has been long, this should prove it to you. So do I use this every day? No, because it's not going to change until the weeklies change. And after that. So what I know is the weeklies tell me we're an uptrend, and the dailies tell me we're chopping. That tells me be careful. It tells me be ready to raise cash, probably raise cash already. And then I like lines on the chart, but we're not going to talk about them on this chart because that's not the chart I drew them on. So you don't need to spend a lot of time here on this chart. I would always look at the weekly because if the weekly's red, we have problems. And if you're a long only trader, and when I start to see the weekly bongo go red, I know how close we are to the market reversing. Doesn't mean it will, right? It happened here, nothing happened. It got really close here and nothing happened to the timing model. So it's both pieces make the difference. During the day, you can update it during the day. Why you'd update a weekly probably during the day, I don't know, but I'd certainly update the daily. Does this bar repaint? Should be a question you ask on anybody's timing model. And that answer is it does not repaint after the bar has closed. The daily bar, we're running it at 405 or 407 or 410. Up until 4 o'clock, and I don't know if there's a few minutes after that, the last data comes in, but once the bar is closed, it will not repaint. The weekly bar will repaint every day until Friday at 4 o'clock, and then the weekly bar will not repaint. So no, we don't repaint. When you look at the back, nothing on the timing model is changing. So we're all going to look at it and come to our own opinion. My opinion here is we are in a pullback in an uptrend. We could call it an uptrend under pressure, whatever you want to call it. What I think is hilarious is, and I'm not picking on anybody intentionally to be mean, but Market Surge is calling this exposure 60 to 80%. That means you're supposed to have cash in the market of 60 to 80%. Some of you participate in the Manslick, New Jersey IBD, formerly known as the IBD meetup group. It's Manslim, and the guy is a market school addict, and market school is the highest end training that IBD has. And he went to zero exposure, and he was making comments about market surges telling you to be in 60 to 80%, but the IBD most involved and best timing model that he uses says to be out of the market. I'll tell you exactly what I have in cash right now. That account that I trade is, hold on a second, I'm pulling it up right now. And I gotta go to, where's the one? So right now I have 553,000 in cash on an account that's 1.2 million. So that's 35%. No, it's gotta be 45% in cash. I feel good about that. But I'm ready to deploy the cash, and I got head faked at 9:35 in the morning yesterday. So, any questions about the timing model? Put them in here. Right now, we're only giving you daily, weekly, and monthly. I might add hour. I want to play around some more with it. Yes, you can update it during the day. You can now increase them, and we've got to turn on these buttons for being like we do in the other multi windows. That's a quick fix. All right. So second thing I look at or the next thing I look at is I look at the US index ETFs. What do I do with the guppy charts? I don't care about them right now. Why do I not care about them right now? Because the markets are doing well. But I know what happens when the markets are in trouble. This is the April pullback. We hardly did any damage. I mean, the moving averages, which range from a 50 to a 300 day, all stayed in perfect order, and they pinched here, but they never broke. In a bad market, right? So this was a little longer of a pullback, and you start to see the shorter ones roll over. And in a really bad market, you'll trade below. So it just gives me a sense. I can look at what we're doing and get a sense of, do I need to be worried or not? And when we get to a really bad market like '08 or '09, we lived below those moving averages. In fact, I hope everybody realizes we got a calendar, and I think, I don't know if we go back to '08, let's see. Praveen did just a fantastic job on this function. Let's just go to March of 2000. I'll go further back. Yeah, that's what I wanted to show you. This, in John's words, are no bueno. You are not long the market when you are below these. And you don't even think about getting long, because if you get to the point where the guppy charts are broken, and here they've all started flipping over, you are in a world of hurt. And I don't even try and play reversals on this. I don't even try and play the quick bounces because you're just dead. And so I want to know where we are. And so right now, I know it's going to take a lot of changes for this to look like that. So why bother spending any time on it? So I don't. US index ETFs. I've made some changes in the layout. Um, so what I have done is I've decided, I don't want that one, that I'm going to keep a couple of things on all of them. I've added the 21-day simple, which is the light blue. Um, the reason why I added it was because I do watch, well, and I highly recommend it. So let me just show you. I showed it to Jeff yesterday when we were chatting. By the way, I don't watch anybody's videos until after I do mine because it'll just mess up my head. And I believe what I believe, and I'm not going to change my mind because of somebody else. Um, I would make it a point if you are trade anything like I do. Um, IBD does these every night recaps of the market. Somehow this one was an hour. They're not usually an hour. Um, and what was really good about this one was the guy with the long hair, Mike Webster, brilliant, brilliant, and entertaining. And he's on Fridays. And I try and watch this. I watched it this morning. And another thing to know about this, back here for a second, what to do with my program? Nothing. Yeah, that's why it was an hour. It's got nothing to do with my program. But what it is it's stuff that's free, that's good. And why wouldn't I tell you about it? James Ropel, Mr. Permable, money manager, successful guy who charges a fair 135, 150 bucks a month for his service, will be doing an hour plus on Monday. And these are recorded and they're stuck up here for free. Free is good. All right. So because I listen a lot to those guys, I like the 21-day EMA. Why did I not care about it before? Because it's kind of the same as the 17-day simple. And those that watch my videos also know that the 30-period WMA is right in the middle of them. So they're all about the same. So pick whichever poison you want. But I decided to leave the 21-day EMA in. So it's a 17-day simple, 21-day EMA. Notice when I highlight it, it tells you what it is. A 50-day EMA. And this is the other thing that I'm going to leave in, which is the 100-day EMA. The scary thing, and I mean the scary thing, Bazzi, drive carefully. I see you're driving. You don't have to turn it off. I thought it was funny. Um, look what we did here in November. We pulled down and picked off the 100-day. So maybe somebody's watching it. Here's the 200-day. During 08 or 09, I kid you not, I put a 500-day and a 1,000-day moving average on my charts. And they actually came down and tagged them and bounced at various times. God forbid anytime soon we have to put 500-day and 1,000 days on our charts. Because if I'm getting close to it from above, it means the market's been horrible. And if I'm coming up from below, it means I've gotten killed. I don't want that to happen. So that's what I've been working with. And on the predictive seasonality, I love that I did this webinar for Tick Blaze, and the guy's an algorithmic guy, Sean, and he goes, "Oh, so you have a predictive charting tool?" I go, "I guess we do." You can just highlight any of them, and that one says it's the 5-year, that one says it's the 10-year, and that's all of them. And why is that important? Because if you look at all of them, we've been flat here for the next couple of weeks through January. But over the last 5 and 10 years, the market's gone higher. I think that tells me something. What else do I have on here that I spend time with? I like drawing trend lines. I especially like the horizontal lines because I don't have to worry about whether I'm tilting up or down. I just use the horizontal button. I think you could probably argue something here through there as well. And the reason why I drew it there is I like to go back to the most recent low before where we are right now and use that as my bottom. And notice how we bounced below and got back in. Well, let me show you my buddy Sagar and why I knew this market was going to be a pain in the ass the last 2 weeks. Forget all the dots and everything, but here's the NASDAQ. The NASDAQ going back here to the end of October is in this wedge, triangle, whatever we want to call it. And boy, we're in this really narrow piece. That should tell us that this market is going to break one way or the other, and it's going to break really soon because we don't typically trade to the end of the wedge. Now, if I remember my education, it's a continuation pattern, and we should be expect to break to the higher side. I'll wait till we get the break, but the automatic trend lines to me are really good. Um, and again, where are we sitting on the E-mini? I'm looking at futures now, which are going to look a little different than the cash. I'm sitting right on support. What does that tell me? I got a doji sitting on support. What does that suggest the market's going to do on Monday? Somebody tell me. Not a trick question. Come on. It would suggest to me we're going higher. Now, it doesn't mean we're not going to break down and be in a world of hurt, but I find those automatic trend lines great. And I think Praveen is threatening to fly to Thailand and sit down with Sagar and figure out how to get them into our program. I'd like to get all of Sagar's stuff in, and I'd like to create a program for him, but he protects his code like Fort Knox. So I don't blame him. So I think it's an interesting time right now. And I think it can go either way. Um, maybe here it looks more like an ascending triangle and it's going down. I don't know. And I'm not good enough at these to tell you which way it's going. This was a false breakout. We'll look at the Hindenburg. This is a false breakout right here. False breakouts sometimes are really bad. And I think about the Russell, which in 21, I believe, maybe 22, most of the time, what was in a Darvis box, and it broke out. And I've shown the slide over and over again. I got all excited. I went long as hell. I've been waiting forever, and then it failed, and the market crashed hard. So I don't like false breakouts. And it looked like that's what it was doing here. And maybe that's going to happen. I got the 50 underneath. This is how I dissect it. Do I do anything down here? Yeah, I look at volume. Volume came up this week. Part of the problems with all the platforms, volume does repaint because volume keeps coming in. And what I couldn't understand, and maybe somebody who knows more about IBD can answer this for me. When market surge showed a big increase of volume, that must be looking at compared to the prior day because it wasn't massive volume yesterday. And so maybe it's just compared to the prior day. That surprised me a bit. Even Wednesday had big volume. So I'm guessing they're comparing it to the prior day. And yes, we are higher than the prior day. Is there anything up here that I play with? Sure. Line charts, I don't use line charts here, but if you like line charts, and maybe line charts are easier to draw some of these. But remember, line charts will not capture the high. This is just a traditional, whatever we call these, open, high, low, close charts. I don't like those. I like candles. I like candles because they tell me stories. They tell me stories. This tells me a story. It tells me the market tried to take it lower and it failed. And it came back within the range. More, and that to me is a bullish looking tail, even though the spider itself was only up 0.19. Notice over on the left-hand side, when I highlight a bar and I can't move it, I'll move it now, you'll see the moving averages, percent change. Now I added percent change, it's an indicator, and then EMA and SMA. So let me do this. Let me up here at the hamburger menu, and I don't know if that's if Rob Hoffman invented the word hamburger, so I'm just giving him kudos. He calls it hamburger. If you go to new layout, you could take my maybe. Nope, it's not listed here. All right, I was going to show you how easy it would be to copy it. I will create a new layout and share a number in top-down trader. But the cool thing is I pick what layout to share, and all you would have to do is take that number from me, and all I would have to do is stick it in here. If you don't have my new market breadth with the 13-week, all you got to do is take that number that I just put in the chat, copy it, go into hamburger menu, settings. Let me just do it and show you exactly. Hamburger menu, settings, nope, new layout. Come down here, enter that shared key, paste, and we should see another add to that. So let us get out and see if it shows up. I think I did it. There's a lot in that one, so it may take a while, or maybe it won't because I got the same name. But basically, that's how you import something, is you copy that number, you put it into the new layout, enter shared key, and then it's already gone. And then hit copy shared. I didn't do that. And then it will build it up here. So let me do it for real. I'm going to go into the chat, just like you can. I'm going to copy it. I'm going to paste it. And now, oh, all right, let me just do it here. Copy it, paste it. All right, why is it not doing that? Something I'm doing isn't making sense. 320, 342, 635, copy shared. Now it should show up here. See how easy it was to take a number, type it in, and it brings up the layout that I wanted to copy. I don't know any other program that does it so quickly. That was one that Praveen blew me away. It's hard for him to blow me away because I'm getting used to how great he is when it comes to this stuff. That one was amazing. So what else can you do on this chart? Year to date, well, there's not much. It's a brand new year. 1 year worth of data, not a bad look. I like to look at typically 130, 3 or 4 months of data. A lot less is on the chart, easier for me to see. If I'm taking it all the way over here somewhere and I want to get back to today, I hit the fast forward, it takes me back to today. If you want to go to a minute chart for some ungodly reason, I think if I just hit up, sorry about that, I'll bring it right back. 1 second. I've not done it in this chart. I've done it on the layout chart, but it should. If I want to go to, say, Again, I don't know why I would for how I trade. If I want to go to a 15-minute chart, I'm going to keep my hands off because all right. Praveen, we got something going on. I had this before. It works in the other layouts. I'll show you how to do it when I get to another layout. I mentioned that a couple of days ago. All right, that's how we find bugs. This is why you may not have version 20 yet. And you don't have version 20 yet. That'll be fixed. We've got it working in all the other places. All right. So what else would I do here? Really, we don't care about fundamentals here. Let's say I want to take, well, I'll do it on something else. We're doing the US dollar because that's what's highlighted here. Now it's got the S&P. This refreshes, updates them for time. This enlarges the one that's highlighted, advances, goes backwards, returns it. Indicators, if you want to add any. And one of the other cool features is if I click on this arrow down and I want to save that, I type it in. I did it earlier today, and I called it Web Layout Base Chart 103-2026. And then I put the 100-day and the 200 and the longer seasonality on all the charts. So that's this. Any questions on the daily indexes? I keep the VIX for a reason. And it was interesting on the weekly. Was the weekly that looked interesting? Now, all right. Okay, everything I keep run. Yeah, this is what I wanted to show you. Is we opened up on the VIX on Friday. We traded all the way up to the 50 and failed, and we closed lower. Remember my convention. Everybody has different convention for candles. If it's a red candle, it is a down day. You can see to the left, this day here was down 17%. If it's a white candle, it's an up day. This day was up 22% if you look to the left. If it's open, it means it closed higher than the open. You can have a down day, not often, but you could have a down day here where you opened here, closed here. It's red because it's still down on the session. It was down less than 1%, but it's open. That's a bullish candle to me, not a bearish candle because it closed higher than it opened. And you could have a white bar that's solid, meaning it was up on the day 10%, but it closed well off the highs. Not as bullish a candle. Got the seasonality. All right, let's move on to the next one. Commodities, I'm not going to spend any time on because commodities are exactly the same. You will notice that I changed my order, and my order is different than yours. Why? Call it Praveen's fault. Because when I fast forward to the next one, it goes across the top and then across the bottom. So it would have gone from gold to oil. I wanted to go to gold to silver. So we talked about silver a lot on my videos. This was an obvious, if you don't believe me, look at the Wealthcharts video I did. I said the market, I actually drew. I went and I drew on the chart. It was coming down because this was a climax run and not sustainable. I am still surprised that it bounced up here. I think we're coming down into this area down here, but who knows? I don't know anything. And commodities are not my super strength. So same charts, nothing's different on this. No reason to spend any time on it, except I use it. Buckets. I love my buckets. They're not my buckets, they're Ian's buckets. Now, Ian pretty much only used the buckets on the S&P 1500. And that makes sense because you got the 500 large cap, the 400 mid cap, and the 600 small cap. Therefore, it controls the whole market. I'll give you that. Remember, between 1 and 10 are 10 different columns. Each column represents a decile in the Bollinger Bands. The first 10% from the bottom, the second 10%, the third 10%, and so on and so forth. The white represents those below, And this one here, which is box 11, Praveen, let's color that one white too when you have a chance. Or maybe color it yellow. Color it yellow. Why yellow, not white? So that I can tell on the side. But I want to differentiate from the green. And those are the stocks above. When we have too many stocks above, the market is overbought and it's going to go to the left. When we have too many stocks below, the market is oversold and it's going to go to the right. When you see that most of the buckets are below the midline, here's the midline. So if you look at the bottom 2/3 versus the top here, we have shifted to the left. We're only at 6% on the NYSE, 9% on the NASDAQ. Actually, say that again. The currents are 6 and 8. 1 day ago, the NASDAQ was 9. 8 and 8 on the S&P 1500 and 12 and 12 on the Russell. Those are not big numbers. Again, thank you, Praveen. I've got the best tool in the market and go down to pick a date, any date. Let's just look at why April 8th or April 7th when I put out my video that would hit a bottom. Pick your date and now tap the reset or recalculate. This one takes a bit, and this is what oversold looks like. It doesn't mean it's going to bounce tomorrow. I had other reasons to think it was going to bounce the next day, but I knew it was going to bounce in the next day or two. 76% were below on the NYSE, 79% were below on the S&P 1500, 52 on the NASDAQ, and 66% on the Russell. I think this is better than what Ian did because not all markets are the same makeup. And I have seen markets where we're really to the left on the NYSE and not on the NASDAQ. So this is a breadth tool that Sagar put it into Q Edge, one of my favorite tools, and he put it in for the S&P 1500. And I started noticing that not all markets behave the same way at the same time, and that's why I do the buckets. I want to go back to today. I hit today, and remember, you have to hit the refresh time. During the day, this will update. And so I will come from time to time and take a look because you'll see during the day, those bars get really high. There is a repainting, I believe. So let me tell you about it. It doesn't repaint after 4 o'clock. But I believe, and this is certainly true on Q Edge, that the deciles are calculated at the end of the day when we know where the Bollinger Bands are at the end of the day. We don't know what they are going to be at the end of the day when the market opens. So I believe that Q Edge and perhaps my tool, and Praveen could correct me if we're actually updating the Bollinger Bands during the day, are using yesterday's Bollinger Bands. So during the day, you may get a different answer. It directionally will be exactly the same. The Bollinger Bands don't change that much. But if you see the ones at the far left or the ones on the far right come down a little bit, it probably means that the Bollinger Bands expanded on that day. And they're less extended, the beginning and the end, because of the reset. What is the right answer? The end of the day, because that's got the current Bollinger Bands in it. And it's the same in Q Edge. And it frustrated me until I realized, oh, there's nothing you can do about it. Nothing else to talk about here. This is powerful. This is really powerful. And think about this. We're putting this all together and giving you what I believe is the best all-in-one workflow for top-down analysis. Market breadth. This is where we started. This one takes a while to load. Praveen is working on caching what's sitting in the bottom. That will speed it up. Why does it take forever to load? Because I like lots of data and it goes far to the left. If all we cared about speed, and again, maybe this is someday a toggle switch. You toggle, you get asked the question, do you want all data or just 2 years worth of data? And I bet that would speed up every chart. I would keep all data because I like it, but maybe some of you just want it to be faster. So I thought this one was fascinating on Friday. So I just used the wheel to spread it out because I want to just look at where we are right now. So again, yep, we're going to talk about the Hindi. Um, I think this, again, I really love what we did here. Um, I wanted more, and I created another one, and Praveen had to build some of the indicators for me. Um, on the left is the NYSE composite, but it's not the whole composite. We filter it for things that are paying like bond funds, and there's a lot of preferred shares, a lot of weird shit. Excuse my French in the NYSE. So we're not including the whole NYSE. And I think Ian did, but in other places, they are in Sager's Edge, for example, it's a much smaller list than the 3,500 or 4,000 stocks in the NYSE. So I'm going to leave the filter as it is. Over here is the NASDAQ composite on the right. Nobody but me talks about the Hindenburg Omen on the NASDAQ. Same reason as I got the buckets on multiple indexes. NYSE, a lot of banks, a lot of energy, a lot of weird shit. NASDAQ, a lot of technology. Well, they're very different indexes. And if the Hindenburg is, for example, is the weak hands buy from, Jeffrey, you're giving me a setup. I'll show you in a few minutes. If the weak hands are buying and the strong hands, the professionals, are selling, you're going to see a market with lots of volume, new highs and new lows, both elevated, and it can signal a top, and that's what the Hindenburg Omen is. Market's been in an uptrend, and then we start getting those things I mentioned. It's very different if you're NYSE and NASDAQ. So I had a question about 2008, and my answer is, let's look at 2007. I think we go back. So Praveen, I noticed we didn't change this calendar. And yes, it's small for my eyes too. Let's just pick July of 2007. So, as a student of the market, I remember 2007 very well because in 2007, the market ran up. These are the Hindenburgs here firing on the NASDAQ. This is the NYSE. Here's the first Hindenburg. And then both of them fell hard. This is July of 2007. This was a tricky market because, as I'll show you, I had a message I had to take care of on the other monitor. And we'll talk about these other things in a few minutes. The market quickly recovered. Well, maybe not quickly, but it recovered. And not only did it recover, and these things here, these green triangles, thank Mr. Praveen, it's the anti-Hindenburg. It's a bottoming signal. The market recovered. And guess what? Went to new highs. We should all be happy. Notice what we hit right here. So now I'm in your 2008 time frame. Let's see if I'm there yet. Nope. I'm in October 2007. My Hindis are back. I should be nervous. I should be really nervous. And we teased us, and then boom. And we know what happened there, don't we? Lower highs, lower lows, and a crash. So What was my big learning? My big learning was if I have Hindenburg's firing and I break the 50-day moving average, I am out of that market because we can look at false signals from the Hindi and you get little pullbacks. But when I break through the 50 and close below the 50, and I don't even care if you want to treat it like I treat my stops. I go out if we go below the low of that bar and we trade higher the next day, you're in, whatever. But that 50 I think is critical for the breakdown. And notice how the 50 becomes a wet blanket on the market before it recovers. So I showed you that obvious bottom here. Are we out of the woods? Nope. And that was a head fake. And we got another bottom. The Hindis fired one. We didn't get a lot of Hindis. And the big bottom really did not occur. And believe me, I thought, bottom, that's a bottom. That's definitely a bottom. And those things, that's a double bottom. But it wasn't. And the ultimate bottom came in March 9th of 2009. So that would be here. Notice what's firing like candy canes. Forget the defib, our bottoming indicator. So I think there's something to this hocus pocus mojo stuff that Ian taught us, including the Hindenburg. And although the Hindenburg is probably the least loved, we'll fix this calendar and make it like all the rest. Even though the Hindenburg is the least loved indicator out there, when I listen to people, they don't want to believe it. You tell me what you think. I love it. So what I find interesting right here is here's the NYSE right off of all-time highs. In fact, really close. Here's the NASDAQ closed right on the 50. These are very different markets. Is it possible we could see the broader markets do well and the NASDAQ sell off? Most of the weighting in the NASDAQ, even the composite, is still going to be the larger caps. I don't know. But if both of them look like this, I'd be really bullish. This one ain't so bullish. The fact it closed at the 50 with the bottoming tail, that's not too bad. Volume, I trust our volume. I just don't use the volume. I look at market surge. I look at other sources. And the reason being that if you come and look at this at 4:15, you're not going to see volume on the NYSE. Our data vendor doesn't update the volume on the NYSE till much later. Here are new high, new lows, AD lines, and up-down volume. In a good market, you have almost constant green new high, new lows, meaning more new highs than new lows. Yep, engulfing candles, yep. And we have none of the other mojo stuff has fired. We did get Hindenburgs, and they're still active because they were less than a month ago. They were 2 weeks ago. So they're still in play. So that has to keep me concerned. I'm going to hope that they're going to be false and that we're going to go back up here and set a higher high because we've got a series of higher lows put in. So that's that. This 17-day moving average, the white is the 50 and the red is the 200. And what we're monitoring here are stocks above the moving averages. If you want to know if you're high or low, you got to scrunch it up and bring in more dates because you could see, let's get far enough back that we get April 7th in. This here, stocks above the 20, 2.5, stocks above the 200, 13%. Where are we today? Stocks above the 20, 31%, stocks above the 200, 55. Obviously, we're nowhere oversold. All right, let's look at a peak of the market. Fine. Where to get? All right, these are pretty high, short-term peaks. 79, almost 80% above the 20, 63 above the 200. Just go back, find measuring sticks, and define what highs are and lows are, and then you compare where you're at today. We're neutral, and we're kind of going sideways to down, which is weakening. In here is a whole day's lecture in itself. And I'll do one because I don't want to spend an hour here. Ian came up with a number of funny name breath indicators. About a year ago, I did the top things I learned from Ian, and they're in there. I don't even think it was a year ago because I think it was after the April 7th bottom. Just to tell you what the things are and what they mean. Let's look at the April 7th bottom. I'm using my wheel to spread out the bars. So I just want to look at this bottom. Not that much spread out. All right. I think we need to do a better job of knowing what's red and green. I have a hard time telling it, but if you highlight it, it tells you what they are. This here is a green. It's white on the inside, and it's a green thing called a eureka. A eureka is a irrational, not irrational. It's exuberance to the upside. A eureka that occurs after a long run up is irrational. So if the market's going down as it was here, and I see a eureka, I get excited because a eureka says there's a lot more buying power in the market. The eureka led to us going higher. This here is a phoenix. And maybe Ian did a bad job of naming it because a phoenix is the bird emerging from the ashes. And a phoenix is not emerging, it's declining. When you see a phoenix, it shows you exuberant moves to the downside. When I see a down day near recent highs, accompanied by a phoenix, that's got more meaning to me that the market's going lower. The lower dropped. I had these two pluses come in, and by the way, they're all listed here. The color matches the word. These two pluses are bingos. What is a bingo? On CNBC, they'll say, it was such a bad day today in the US markets, they were throwing the babies out with the bathwater. The genius of Ian put numbers in math. So these are the babies out with the bathwater. That's an excessive selling. When you start to see excessive selling, you know that the market is getting close to being overdone. So I had two excessive selling days. And this is the day I called the bottom. And I did it as much because of this tail here told me it's done going down. Don't know for sure. Then this bar had a phoenix. Remember, Alan Greenspan killed the market one day. The market's going crazy up. And Greenspan came out and said, we have irrational exuberance in the US markets. And the markets dropped hard. All right. So if you get a phoenix after a big sell off, or you get a eureka after a big gain, ask yourself the question, is this irrational exuberance to that direction? So now I got even more reason to think there's a bottom. And then I got a eureka on the bottom. A eureka at the bottom and a phoenix at the top, I'm in. And by the way, I had a defibrillator that bar, and these are transparent so you could see anything underneath, so probably stuck with the white. Maybe we can make the outline a little thicker. And that was the bottom of the market. Here was another defib here after a little pullback. The only one that I haven't told you about, because we already talked about the Hindenburg, is this guy. What is this guy? If there's an opposite of the bingo, it's called the bango. And the bango is we're buying everything in sight. There's too much buying pressure. Again, a bingo too much selling pressure is actually bullish, and the bango is you're buying so much it's bearish. So Scott, you should see these in market breadth going back to version 1. So I think Praveen's going to push version 19 if he hasn't already. And I told you guys I'd show you how to get it if you don't have it. But you should have it. You may have to reach out to me or Praveen and let us take a look, but it should be there. So there is so much power on this market breadth. I should take it out and sell it separately. I'm kidding, but I should. I think it's like Ian's brain in one layout. And I'm sorry, I know it's not standard, but I think the Hindis on the NASDAQ composite tell a story. I'm going to jump to my new market breadth, which is the one I put the number in for you earlier. And what I did is I wanted to add to it. So price volume, daily charts, 13-week new high, new low. Here's a repeat of the stocks above the moving averages. Here's your AD line, and here's your RSI. Do I use the RSI all the time? No. It's not bad to look at it from divergences and things like that. And by the way, it's divergent to the downside, which is bad. The big thing here is clearly the 13-week new high, new low. Just go back to that date. And again, it's a great thing for you to do on your own and look at what things were on this date. New high, new low. That was, what date is that? Let me get the right date. That's the 10th. That's the 3rd. Let me see if I can, yep, that'll help me out. Here is the 7th. New high, new lows. Let's look at the spider in the upper left. It's 0. On the S&P 1500, it's 0. On the NASDAQ, it's 0.01. And on the Russell, it's 0. This thing is an indicator that they had on TC 2000. It has been something that I've watched and used forever. No one knows what market it's on, and they don't really tell you the formula. Praveen's done a great job, and it matters to me. So, like it a lot. That's the key on this one. You can look at different times, I believe. Yep, because I set it up that way. Not I set it up, but when I created it, it allowed you to do that. And you could look at that same week in November and in April and see that. I've never looked at monthly, probably won't, and certainly I'm not looking at hourly. So those two, market breadth and market breadth, new high, new low, 13, are our money. The rest of the stuff, I'm only going to talk about a couple of things. The ratio charts. The ratio charts are making a comparison of something Bitcoin or the 13, or rather 11 S&P sectors versus the spider. Material super strong, that's what strong looks like. Industrial super strong, that's what strong looks like. Energy actually increasing while staples have come down, discretionary has come down, real estate has come down. I like this to give me a sense of what's working in the market. I know one of the people on this has the product in Metastock. In Metastock, what I did differently was I set them up on the timing model. And I don't know which I like better. I like them both. And I can see that on the timing model, which since most of you don't have this, let's give it to you. New layout. Sector timing non-ratio. That's the number. Copy. Pasting it in the text chat box. And if you take that number, you put it where it says enter shared key, and hits copy shared, you'll have your very own version. So, yesterday, Bitcoin turned positive. Technology, which has done well, turned negative a couple days ago. And let's just go to 50 bars here. Technology just turned negative. Discretionary is negative. Communications is close to turning, but still positive. Industrials turned positive. Strong day. This looks like financials are reversing. Still positive. Energy turned positive 3 days ago. Materials strong. And then down here, real estate, nope. Utilities are funny because the traditional utilities behave like staples in real estate as defensive. But now a lot of these utilities are in the data center power business. Here, staples, weak, and discretionary, or healthcare rather, weak. XLV, weak. So if I was looking to buy, I'm looking at industrials. I'm looking at XHB as probably the leading places to go searching. So now you all have that one. The key stock timing is a new thing that I added. I'm playing. I'm not saying you need to do this, and I'm not saying it should replace anything that you're doing. But I am going to give you the number. Here's the layout. Now, how cool is it that I copy a simple number, and now you can put your own layout in your system. So all I did is I applied the timing model here to stocks. I like it because I can put the big guys. Amazon, don't like it. And Amazon, this is what it did to us, same as Apple yesterday. Amazon opened, traded higher, and died. Came back some, so there's hope. Bad. Apple, same thing, not as bad. It's just under the moving averages, but it's below that 21-day EMA, so that's not a good thing to be buying right now. And notice timing model says no as well. Google, this is where I think you could buy. This is probably the best of the bunch. Still, the timing model says no. And it did the same thing. It ran up and reversed. Meta, it's been coming back. It broke down. Timing model said no. Netflix, unfortunately, we're going to miss the best seasonality of the year because this one is mired in issues related to a takeout of Warner Brothers in a fight with Paramount. And then the next one is Tesla, all-time highs. This doesn't show the pre-market. They released deliveries on Friday, traded up 2%, and then they sold off hard. That doesn't look real good. BYD is kicking their ass in total deliveries. And the BYDs are not widely available in the US. They do have a dealer in California. When I was in Uzbekistan a year ago, I got to play around with their cars. They're beautiful cars. Of course, they probably fall apart because they're Chinese built, but they're real competition for Tesla, especially worldwide. NVIDIA holding up better than all of them. It still has a buy signal. I listened to somebody who said he thinks it's dead money. Probably is for a while until they have their earnings, maybe. The worst, besides Netflix, Microsoft. Ouch. Teased us and broke down. So we know that these are part of a group. So just for grins, I typed in MAGs yesterday. Yep, the MAGs are not strong. Labu, to me, a much better way to play biotech. Maybe it's done. I still have a little bit left because I don't want to give up until we get another weekend when the JP Morgan, because there have been years where there's been multiple buyouts that have occurred going into that meeting for excitement, but I'm a lot less than I used to have. TPH, pharma is holding up well. I just put a couple of themes in here. You can put whatever themes. Data centers. Remember I talked 4% up, and this is where all those good stocks are. So is the ETF. And then this was the quantums. I hate this group because God knows when they're going to have money. But the group moves and it had a big day. So I like to do that with that timing model. Do whatever you want. This is not only one, this isn't just Jeffrey's way to trade. I'm giving you a toolbox. Then lastly, 20 minutes is not enough, but I don't have much more than 20 minutes and we'll go over it again um, as needed. So very quickly, I want to go back to the PowerPoint and let's get into this picture here. Let me tell you about how I use each of these things. I skipped it. So I wanted to create an EKG for stocks, and that's what the dots do for me. From the top, the high-low oscillator goes between plus 100 and minus 100. If you get close to 100, you are overbought, extended. If you are close to minus 100, you are oversold, except for when it doesn't work. When does it not work? If you are trading sideways for an extended length of time, how can you be overbought or oversold? You can't be. It doesn't work when you had a market that's been trending for a period of time. So if you are sitting on the 200 and the 50 and the 17-day are just a little bit away, I don't care what the high-low jump says. So we only use this when you've been trending up or down. Bongo, we talked about a lot. It's a trending direction. Blue is up, daily on top, weekly on the bottom. Praveen, it would be nice if we could maybe put a white D on the left and a white W so they know which is which. In the body of the chart, green is the 17-day, white is the 50, red is the 200. If I put in a 21-day EMA, it's going to be kind of purplish. We talked about seasonality, 3 time frames. I'm going with 5 days, 10 days, and forever. And you'll tell the color by touching it and see what lights up over here. We have a faint line here, which is based upon what we think the IBD relative strength is looking at, which is looking at how you compare to the rest of the stocks in the market and heavily weights performance in the last quarter. And so you can see it here faintly. I want to add it to you can add it to the grid. And but you can see right here what your relative strength is. Same thing as this number. My dots, starting at the bottom. Green candle low, red candle high. David Elliott's false new high, false new low. It means a red candle high means I traded higher than the last 10 bars and I closed down. So I have a red candle. It's the type of candle that you expect to see at a reversal after a big run up. Here was one here as well. A green candle low should be green, not blue. We've left it blue. It doesn't really matter. Would be you open. Here, let me find a good one. You open down. I don't know. It must be this one. You open lower, close higher, and you have a green candle, and you have the lowest low on the left 20 bars. So it comes after a pullback. These are single candle reversals. The next group I'm not going to teach is the Wilder PSAR. It's just a timing model from Wells Wilder. The third one up, where you see the yellow and the green, is the squeeze, which is the Bollinger Bands contracting within the Keltners. The green dots are sometimes, why do I want to know when it's squeezing? I want to know when it's coming out. So by convention, I give you 3 dots to scan for when it comes out of the squeeze. Um, Momentum is a combination of force and kahuna. So it has percent B change, it has volume, price change, and it compares it to the last, um, either 2 or 13 day periods of time, depending on how you program it. Breakout is a derivation of David Elliott. No, yeah, David Elliott's Mobo Breakout. It's a standard thing in Thinkorswim. The next one up is Big Volume Day. So here's 4 dots. A derivation of Morales and Katcher's Pocket Pivot, looking at just the volume signature with a little change. And Big Gap Up is a derivation of the Bible Gap Up. I only look for them if they close in the top half of the candle. So a candle that might gap up opened here, which is a big gap, and closed lower in the lower part, not as important to me as one that breaks out and closes higher. That one didn't meet the volume criteria. Then you have an empty space, and then you have 2 different crossover trading systems, the CPR on top and the EMS. Not going to go deep into those right now. Next one down is the relative strength of your instrument, in this case MasterCard, versus the spider. So it's a ratio chart. And we're looking for that ratio to break out above the moving average. And this is on balance volume with a moving average, and we're looking for it, is it above or below? That's my chart. Now, let's go back into the program. I don't have a written manual per se. I have on the website, and just probably worthwhile to go there. And it will always be in progress. And frankly, I want marketmripro.com, Market MRI Pro, to be a work in progress with constant additions over time. How-to videos. I've got to update the layout one wherever it is. Or did he not put it in here? But so we do have, I got to give him the layout one then. We do have videos in here for user guide. And even if you have Metastock, the things that are in Metastock, the dots, the timing models are all in there you can use as well. All right, so that tells me what's in the chart. Up here, drawing tools, news. Double click. You can read what the article is. All this is included in the base price. Pick the type of chart. I'm going to leave it on candles. How many bars I want to default to. I wouldn't do 30 on a stock, but let's just do 30 and see what it looks like. Got it. Now, let me tell you something about the news and the technicals. If I hover, it opens. If I unhover, it closes. If I click, it stays. If I unclick, it goes away. So pick how many days work for you. I'm always experimenting. There's 180. If I want year to date, which will be 1 bar, or do I want a full year's worth? I can pick what day I want to go to. If I pick a day, it's going to be in the center of the chart is the day that you picked. That's how we built it. This here returns you to the right-hand side if you've gone back to the left and you want to go back to the current chart. Here you can define how many of minutes, hours, days, weeks, or month. If I wanted to look at a 2-day chart, which I don't usually do, that should go to 2 days. Let's see if it's going to do it. I don't want to take the time. I've not tried that before. It goes to 2 minutes. I don't know if it will do 2 days. I guess it's not doing multiple days, but you saw how it went to minutes. This is the technicals. If I hover and unhover, If I stick, when I clicked on it, it stays. I like to look at when are my next earnings, March 9th. I'm projecting 7 cents versus a 22-cent loss. Well, that is interesting to me. I don't even know this stock. I don't really, probably don't like the stock, but that's interesting because you're going from negative to positive. These have been your earnings per share growth of late. Pretty impressive. We have surprises almost every time, mostly to the upside. Here is the revenue 2051 versus 1883. Not a big fast grower, no surprise. Here's revenue change, surprises, some of fundamentals, and I like dividends. I like to look at PE. Ian was a big ROE person. Um, and I love the fact that for most of these, we'll have the earnings dates. So I like this. The percentage, if we did it the right way, should be comparing, and I never figure out how they do percent from negative to positive. This one versus the same quarter in the prior year. I think that projected earnings are built into stock price. So it's the ones that are beating projections that get the biggest move. Now, this is crappy stocks. Let's put in something that's actually a better looking stock. Put in AbbVie. 337 versus 216. Whoa, that's 50% growth rate. Kind of a turnaround on earnings growth. It's got a multiple of only 17, pays a 3.5% dividend, is living on the 50. That's interesting. I want to learn more. I hit the TV. That looks like a TV. And I just opened up AbbVie in a trading view chart, and it's got the same indicator package, except it can do a weekly as well as a daily relative strength versus a spider. You get these when you buy my tool. If you bought my tool and don't have them, email Praveen with your TeamViewer ID. He'll validate that you're a paid subscriber and you'll get activation of the trading view indicators. That's it over here. Up here is the refresh. It refreshes automatically during the day. And to refresh it, you do what I just did. The base includes all the stocks in the NASDAQ, the NYSE, and the Amex, filtered for $1 and 100,000. It's at 3622 today. That's kind of an average number of stocks. All right. You could look at weeklies, the Russell 1000, 2000, the 1500 S&P, the NYSE, the NASDAQ, ETFs, S&P 500 or NASDAQ 100. I don't care what your list is. You will notice when I drop down the, drop down this, and I skip something I'm going to go back to in a second. When I drop down close this, if I want to type in Microsoft, MSFT, it pulls up a list. Every stock in our data set is assigned a sector and an industry group. That's important when we get to the top down side. What I forgot to tell you about is if you hover over the name of the stock, it tells you what it does. It tells you a lot of what it does, maybe more than you want to know. Here it's going to tell you what sector it's in, is healthcare. I wouldn't mind if we added what industry group or sub-industry group it's part of. That's something we could certainly do. Across the top, everybody has impulse and top down. And then I don't even remember what it says, ABC or whatever. I have added a bunch of tabs. Over here is a drop down. So you could see I've got person screener because those of us that are fortunate enough to buy the beta version of John's stuff can either use his stuff freestanding or integrated into one product. It will become available again soon. And then I have my own special list that I like to follow, like the HDSI top 50. Up here, it's going to create a index of the top 50 stocks. pretty good index, isn't it? I wish well, maybe it did look good, but I like my portfolio to look like that. So that's probably a good list of stocks to look at. I get that obviously I have HDSI. So I start with the impulse list. The other list, how do I get them? Simple. Let's take a list. I go to where the source is. In HDSI, I copy it to a list, and I go to this little guy here. It says paste from clipboard. Let's see what these do. This one charts it. This one, I think it copies what's here. This creates an index of the symbols in the list. So let me see if I can make that get wide too. All right, this one here, another index symbols in the list. This one pastes symbols from the clipboard. That copies to the clipboard. That's if I want to import it from a file. So I have text files that I create specifically to input. And they sit in here. And here are text documents that I could import. Delete rows, refresh data for symbols. So there's a number of different tools that sit up here. Up here in the hamburger menu, settings is coming, but what's new will tell you what's new in each update. And there are periods of time when there's a little bit more verbose descriptions of what you have. The question mark is as close to a manual that we have, and we're going to build this out more. And it goes through the different feature buttons and different things that I just showed you. So we might make the sausage in one place, we make the music here. In that base, let me go to the impulse. Here's my 3,600 stocks. I drop down some of my favorite scans. The scans are pre-built for things that I like. I just want to see stocks above the 200-day moving average, 2192. So if I look at any of these, they better be above the red. Okay, they're all going to be above the red. Click the X or I click this to clear it. If I want to look at stocks that crossed up through the 50 today, all right, that should be things that are interesting to me. So this was below the 50. It's a buyout. Who cares? Deckers. Now, so Praveen, remember I told you I thought I saw some issues. This crossed up through the 50 back here, but it's showing up today. It's crossing through the 200 today. There are a few that were outliers. Again, this one crossed the 200, not the 50. So we have to tighten that. No, Jeffrey, but the Metastock add-on list is $9.97, sold for typically $5.97 at sales, and this price is $26.95. This is a lot more full program, but much of the important things I ported to Metastock. I don't have as much control over Metastock. So we're going to make sure that those are fixed correctly. 500 is support. It should be things pulling back into the 500 if it's working right. Here's the 500. It's just defined as the 50. So it's got to be within a certain percentage. So here's one sitting on. So I'm looking for stocks doing a specific thing, sitting on the 50. I think the 50 often is a good support and a good place to buy. If I want to look for pullbacks in an uptrend, which I've previously defined as a stock in an uptrend, so the weekly is blue, but the red flipped to the daily flipped to a red, I should see weekly is blue. Here's your pullback, and there's a red daily flipping back to blue. So I've got patterns. I've got a number of trading systems. One of my favorites is the 2-day Momo up. All of these stocks have the double dots, two momentum dots. They may not all be good trades, but they all have the two momentum dots. And these are things that I always like to look at. I also have in this section EMS crossover, so my short-term timing model, a multi-time frame CPR that looks at both the weekly and the daily to find swing trades, a weekly bullish reversal looking at things that are reversing on the weekly, looking for buy signals now on the daily. Dynamic systems long is one I haven't taught you yet, which we'll get to soon, not today. Moving average relationships, again, we're going to go through those and make sure they're fine. Maybe I only want to look at stocks that are at new high on the relative strength rate. So if I open one up, it better be 96. Takeout, who cares? Nice uptrend. So I'm looking for stocks that have got high relative strength. I might want to filter when I have a lot of scans for stocks that are in the top. But the piece to resistance is the A plus, where it filters those two-day dots for the ones that I think that are better. Better would means the weekly is blue, so we're in an uptrend. The high jump is not at 100. My relative strength is above the moving average, and my OBV is above the moving average. That's not the chart, so let's look at one and let's see how closely it fits. Double dots, relative strength and OBV look good, not extended, weekly bongo is blue. Ondas Holdings looks interesting here. The A is a different timing model. This is my traditional A trade from my live education. CCJ. I am looking, stock is in a squeeze. It has either a momentum, we have to rename that momentum because it's not the kahuna, Praveen, or a breakout. The relative strength and OBV are both above the moving averages. The bongo weekly is blue. That is my A trade, and I took this trade on Friday. And by the way, at 9:35, it showed up in the scan. Okay, all of these made the A trade. TER is another semiconductor. Squeeze, Mobo in a breakout, relative strength and OBV look good. Not extended, weekly bongo's blue. ROK, Rockwell. Squeeze coming out, momentum, good relative strength and OBV. We could put name in. Let me tell you a secret. See that thing? Is that the one? One of these things is what I want. Here it is. You click up there. These are the lists. One of these things, and I can never remember which one. Is it this one? Controls the column names. There's a way right now to add columns. And so you can add, name is already there. You just have to select it. I'll have Praveen do a quick video how to add columns because name is already available. We just run out of time, out of space rather. We're running out of time as well. So that's the A trade. Watch my videos. You'll see how I play those trades and what I think about them. Top down. I'm a top down guy. I think I came up with a realization over the holidays. I might want to be looking at the 5-day sort and not the 2-day sort and not the percent change. Don't know for sure. It's just something that I noticed when I was playing around. But I could sort utilities by percent movement 1 day, energy, and not the sectors, not utilities. But Jeff, this looks different than it did in the daily briefing. Of course it did. The daily briefing is using the S&P 500 sectors. Since I have left the JS layout on base, the top down is all 3,500 stocks. Beautiful feature by Praveen. I could look at just the S&P 500. And now I'm only looking at those stocks. So now I could pick energy, industrials, and utilities. And I could come over here and I could rank by percent performance and take 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So they're in the top 10 industry groups, in the top 3 sectors by 1 day percent change. I have 33 stocks, and I could certainly put them in there. Nope, maybe, and start going one after another. Getting close. Nope, nope, and flip through this CAT scan's beautiful. CAT scan. Caterpillar pulled into the 50, good seasonality, good volume, breakout momentum, relative strength in OBV. That looks great. And I can go down the list. So that's how I do top down. Let's say we talked about data centers were really good. Now, I wish I could tell you I was smart. I knew where data centers were. They're everywhere because it's going to be the caterpillars. It's going to be the cables, meaning the optical cables. It's going to be the hard drives or SSDs, the memory, the computer chips. It's going to be the energy companies. So I've asked Praveen, and I don't think it's done yet, to be able to take ETFs, including the ETFs of the various industry groups and sectors. Yep, good. I'm glad you found it, Randy. And I don't know if it's going to do anything this one or not, but what I want to do is come up with maybe 100 ETFs, which I already have, of what are kind of good for timing the model for the various industry groups and sectors. And I'm going to want you to be able to have them show up here, and you click on the ETF, and then you get a list of stocks in that ETF. Because based upon what I saw here, actually it's on the key timing one, and what I saw in my review, I want to know what's in DTCR. Turns out we have it from our data vendor, so that's on the list for Praveen to add. So it would probably have to be another title here because we'd want to have the ETFs and then the components here, and you'd have the same type of tools for ranking them. Guys, I'm tired. I owe you more time on this. I could probably spend 3 hours on this one. I've tried to answer your questions as they go. I went in the order that I do my workflow. Every time I do this, I learn stuff, and it's my program that I put together with Praveen. Kudos again to Praveen. This is a one-man shop, and I think I beat most of the products on the market with one really smart guy. Few of my trading ideas, but I think that Praveen is amazing, and he's the one that should get all the credit. So I thank you guys for spending the 3 hours. I will, actually 2 hours today. I will post it on the Top Down Trader website. I'll probably put it on YouTube. I got to get people excited about what I do. And maybe they'll see the performance and they'll think it's meaningful. And I will tell you the biggest difference this year than prior years is I had a working version of this the whole year. And I do think it helped me a lot. A lot is executions, but I think this one forcing me to do those videos nightly and following a plan with a tool that does everything for me, and hopefully for you guys, you'll get the same benefit. So thank you. Thanks for all the nice comments. Oh yeah, I promise you one other thing. I actually don't want to forget things that I promise. If I right click on the Windows Store, it says updates and downloads. I open that up. It tells you when you were last updated. So I am on 20, unless it updated today. Last update, the 24th, and I am on version somewhere 20, 3.20. Okay. If I just go to the screen that pops up 19 should come up this weekend. And I just go to check for updates. If you've never done this before on your machine, go eat lunch because it's going to update a lot of things that are standard Windows programs. But once you do it every day, it goes immediately. And that's how I get it updated. Now, I also know it updates by itself most of the time. So you can always, if you don't see 19, go to the Windows Store. Praveen, you're on. Is 19 out at the Windows Store? Quick answer, yes or no? He might be sleeping during my video, which I wouldn't blame him. He's heard it enough times. I'll get the answer for that. I'll put it on top down. But go to the Windows Store. Yes, it's out. So Scott, go to the Windows Store, check for updates. I installed yours when you were at my house, so you're in the Windows Store. If you do not, if you own the program and are using the program and you do not have it in the Windows Store, then you need to have that addressed. And Praveen and I both send emails to tell you how to do it. Reach out to Praveen and he'll send you the email back. We need everybody on the Windows Store version because we're going to stop supporting the updates any other way. And this makes everybody's life easier, including yours. That's it, guys. I'm going to give the rest of the day to my wife. And then John Person's going to come over and we're going to play cards with our wives later. So I'll catch up with him on where he's at with his add-on. Have a great rest of the weekend. Happy New Year, everybody. Thanks for your support. Thanks for being here.